Hey everyone, Dan Dog Crypto. The past few weeks have been very interesting, very bullish on cryptocurrency because of what has happened, certainly with the banks that created a cascade effect and further possible difficulties in the banking sector. The ultimate with cryptocurrency and our large cap, our Bitcoin, starting in 2009, a decentralized network or mining network where code and the network verifies trust. It will always do what it says. It will produce a block. Cryptocurrency, code within Ethereum, smart contract, trust. Trust is essential. When a code verifies and has been audited, Bitcoin, the largest computing network, independent, not centralized. Ethereum, their upgrade with the Shanghai upgrade that will occur on April 12th with the beacon chain and with the stake Ethereum. Well, the validators, the nodes, again, it's a decentralized network. Trust is essential in anything that we do. We've had ongoing events from leading officials, policies that have been put into effect. But trust is key. Just the whole phrase of trust, because in anything, trust is the key element of social relationships and a foundation for cooperation. A lack of trust is a serious consequence. When we look at cryptocurrency, from your data, your gaming, once the code has been identified and verified, that's the definition of trustless. When you hear CBDCs that are going to be put into effect from a central entities, or the Fed Now payment system, or the economics of the world where a division is occurring and you hear the yuan, they're going to transfer oil from Iran to China, Russia. Trust is essential. And they speak about gold, gold back, minerals. All these effects with the magic word is trust. They want to use a technology and use the interoperability of the technology, the blockchain technology, but we need to trust them that they will do the right thing. They want to implement rules and regulations for safety because we need to trust a network, verifiable, a Bitcoin network. It is trustless. It is the truth. Ethereum, truth. ERC20 tokens provided within the code, trustless. But the code is crucial. And again, they say trust. We're going to back something. You need an intermediary. We need to verify that, yes, that this cryptocurrency is verifiable or a digital asset, whether it's a CBDC that will be backed by gold. Well, how much gold? That was done at the Brexit, at the end of World War II, where the United States currency was backed by gold. 1971 comes along, and we're no longer going to back it. It becomes fiat. Well, the trust factor in 1971, when Nixon took America off the gold standard, the Allies believed that America, the intervention with Vietnam, the Korean War, intervention fighting communism, and trying to mitigate and control countries, that they were just printing money. And did they have the gold reserve? They were questioning the trust because they believed that they did not have the gold reserves. France was the first country to come and reappropriate their gold, but not to have a gold run, because Nixon called the speculators. What happens? We're going to temporarily remove us from the gold standard, the strength of a nation. We need to trust that they're going to do the right thing on your behalf. So you have paper money, fiat, that gets printed into infinite. But now they want to use a blockchain or a distributed ledger to create cross-border moving currency seamlessly. But trust. We had the trust. But what happened? We have central bankers. Trust again. So in these most economic times, trust. But there's intermediaries. Cryptocurrency eliminates this. You have your Bitcoin, the largest computing network in the world. Ethereum, smart contracts upgraded. And you search your Cardanas, a layer 1. The code verifies the nodes. So now there's this trust factor. They're going to do for our behalf. But the fracture within the banking sector, Dr. Doom, Nouriel Roubini, and he just talks on what exactly is happening and what has happened. Because the most conservative investment, which is treasuries, has poorly performed in these economic times. The trust factor, because low inflation, because low interest rates, zero interest rates, massive money printing. What does it create? Disruption across the board. Here is Nouriel Roubini.
Is this higher rate regime a mega threat, Nouriel?
It is, because in the 1970s, when we had the stagflationary shock that led to inflation and recession, debt ratios in advanced economies were only 100% of GDP, private and public debt. Today, there are 420. So we have the worst of the 70s in terms of negative supply shock, reduced growth and cause inflation, and we have debt ratios that are much higher than after the GFC crisis. And during the GFC crisis, we had the debt problem, housing debt, mortgages, bank debt, but we had negative demand shocks and a credit crunch that led to deflation, so we could do massive monetary, fiscal fiscal and credit easing. Now we're entering a recession and financial instability, having to raise interest rates because the inflation is too high. So we get inconsistency and a trilemma. We cannot achieve price stability, maintain economic growth, have financial stability at the same time. So eventually we'll have an economic and financial crash.
So there you go. So Nouriel Roubini, certainly of what has happened with all these fractures everywhere within this whole financial system. And what did they do? Silicon Valley Bank, certainly they protect the depositors who created the bank run, the elite and 1%. So cryptocurrency, based on the system, creates opportunities being in the correct cryptocurrency. But there will be a bull run. Right now, the narrative, they're still controlling it. Bitcoin, once it breaks 29, 30,000, it should easily shoot to 40 in these uncertain times. So now with Ethereum, the Shanghai, no, this is going to work. Ethereum. And then, of course, as we move forward, once the Shanghai, if anyone is familiar with PulseChain will launch. Crucial. PulseChain will launch, which then every ERC20 token will be copied over on PulseChain. Now we search. As we search for cryptocurrencies, and we look at PZEN, but you have to understand what PZEN is. It is a Web3 token, socially engineered, the economics. But what is happening with PZEN on the wealth redistribution? It's a continuous compounding based on each interaction. Pay it forward. The 2% that goes into a pool. But pay it forward represents something. Doing something for good. Helping. Assisting. Something that cannot be done alone. There's a benefactor both ways. So there's a charity wallet that is attached to each interaction and transaction. So April 28th, it's Global Pay It Forward Day. So at this point, this distribution that gets accumulated in the charity wallet, that 0.02%, gets distributed. Whether it's going to do something for a public good or it's going to be distributed to a charity. Doing something good. Pay it forward. Now, once the DAO votes and decides for public good or a charity, there will be a distribution. But PulseZen, the whole economics of it, you have this burn. So we know we're reducing the supply, 0.01%. So it's deflationary. When you have something that is deflationary over time, reducing supply, burning the supply, naturally there will be price appreciation. But we look at PZEN and most people don't understand. And you look at volume. It's an accumulation. You have an accumulation and distribution. So at 0.0045, 2,401 PZEN holders. When there's an interaction, there is a distribution. So, with modest volume, PULSECHAIN is a wealth redistribution economy. It is designed to redistribute wealth equitably and fairly. So now, when you look at PULSECHAIN and you look at the function of PULSECHAIN, the transaction, and you look at the holders of PULSECHAIN, it is creating a fair economic economy, an income-producing asset, which is what you want. These are the interactions. But when you take a deep dive into PZEN, and you say, pay it forward, where you have an interaction and you pay it forward, but the symbolization of what pay it forward represents is an income-generating asset that is held in your decentralized wallet. Crucial is what happens when an interaction occurs. What's the max amount? We have 2,400 Zenites. And the Zenites, as a purchase occurs, there's a pay it forward. So doing good, because it also goes into a charity wallet, or it's going to be for public good. But you have to look and understand, what is the max supply? It's 880 million PZEN token. PULSECHAIN is a wealth redistribution economy. If one wallet or large whale wallets control the ecosystem, it is no longer a wealth redistribution economy. A common, ordinary person can take a position and receive income, because what will be the future value of PULSECHAIN? This anti-whale function of PULSECHAIN. It is a function that is within the solidity code, because what you want is to create a pay it forward, a wealth redistribution, ensuring equitable distribution of wealth, reduce the supply, but an anti-whale function, so you don't have large whale wallets dumping on your head. So what is the max supply? 880 million. The max supply of a decentralized wallet is 2% of the max supply. So that max supply, when you look at the wallets, it's creating a fair distribution, because there can only be a max supply of 2% of the total of 880 million. Well, when you look, and everyone takes a look and looking at the volume, well, then you can also look deeper, and a transaction, a max 1% of the total 880 million. So what happens here, it's controlling and creating a distribution so a common ordinary can enjoy a wealth redistribution, or accumulate wealth, or have a income stream, because that 1% of the total supply. So a wallet can only accumulate, one decentralized wallet, 2% of the total PZEN economy. Transaction. A max transaction of 1% of the total supply at any one time. So it prevents a pump and dump, and it creates a fair redistribution, but it creates an equitable pay-it-forward distribution. So what happens here is you don't get a dump, and you get a steady increase. So now that 1% per any one transaction is the total of the max supply. So pay it forward represents and symbolizes something that you cannot do it alone, that when everyone interacts and unites as the Zenites and you share it. Why? Because this is a pay it forward wealth redistribution, but it's equitable and fair. That's what PulseChain is. That is the anti-whale function. So now it's creating fairness for accumulation, where you can actually dollar cost average into PulseChain, because you're not going to have a massive pump to create a dump. And you're not going to dump because the max amount at any one transaction is 1% of the total PZEN. So roundabout, max wallet size is right in that 18 million max. So now, yes, you can interact with a multiple wallets, but it creates fairness. But also that 1%, so you can't dump the price. So it creates fairness on a distribution where you can offset the purchases. This is an economic economy, a wealth redistribution economy. So there will always be an accumulation and a distribution. So the EVM on the Ethereum chain is verifying your asset. It's an ownership of a decentralized asset. Well, the Zenites are the holders of a pay-it-forward economy that you uniting together, sharing the benefits of an anti-whale system that creates a fair redistribution. And it does not dump. It will accumulate and move and direct as time progresses, because you have the burn. So your burn function hasn't even yet kicked in, but it will. Crucial. The common ordinary, anyone that has not enjoyed economic freedom, with PulseChain, with the pay-it-forward wealth redistribution, wealth is not scarce. It needs a better redistribution. But anyone can pay it forward. So you take a strong enough position, but you can introduce it, because this becomes a income generating asset. It becomes a 401. It becomes the money market accounts, a continuous compounding that you can accumulate and distribute. So now you hold your principal because it generates income, and as time travels, as time goes on, as we enter and more understanding of what PulseChain is, more eyes, because this is an opportunity. When you see everyone is we're so accustomed to one pump or multiple, where we're accustomed, we need a whale. This is creating a wealth redistribution. And by all means, do not think there is no whales in the PulseChain economy. You want to create a wealth redistribution economy. You want to control the max supply of a wallet, 2%. max transaction amount 1%. So they will always do what? When they're reaching their max amount of the supply, they're going to take a distribution, which then becomes a pay it forward. So no one wallet controls the ecosystem. But at any time, there can be multiple purchases that will accelerate the price. What is the future value? What is your continuous compounding frequency reward? That can only be annualized on a yearly basis. But it is early. PulseChain is launching. You will receive a copy. This truly is a wealth redistribution economy. Sometimes we want it quicker, and we believe we need it now. The charity, public good, distributing it, anyone that has interacted with PulseChain, that 0.2% that got redistributed to the pool that will be paid forward on April 28th, or when the devs decide, or when the DAO makes the final decision, you have done something for good and you will be benefited. There will be a reward. The basic fundamentals help enough people do or get what they want out of life, but you're helping others, paying it forward. Yes, we all may have needs, but remember, when you're within an economy that shares the same common purpose to create a fair and equitable redistribution of wealth, to create an income generating decentralized wallet, the future value of that asset, well, you introduce it, you share it, because what is the basic principle of pay it forward? You help 3 other people because you want to assist as many people as you can, because you have something that truly has the possibility of changing lives. Wish you the best. Talk to you soon.